comes from the banks. Banks create money. When a bank gives out a loan, it's not using existing money. It's not using deposits. It is actually newly creating money out of nothing. Central banks, well, they do create some money, essentially the paper money, the cash, but that's usually around only 2 to 3% of the money supply. So the question is, who creates the 97% of the money supply that is fueling the economy, asset markets, if you do it correctly, create economic growth? Well, it comes from the banks. Banks create money. When a bank gives out a loan, it's not using existing money. It's not using deposits. It is actually newly creating money out of nothing. So a bank loan is always new money creation, new purchasing power is given to the borrower and added to the money supply. And this is new purchasing power that didn't exist before. When we talk about banking, the key function that distinguishes banks from others is actually in their lending operations. This theory that banks are just intermediaries, they gather deposits, they lend out those deposits, and we can use, therefore, bank capital requirements as a tool to keep the banks under control is plain wrong. And the key question there is, where does the money come from? Now, the currently dominant one, the mainstream theory that is pushed in the textbooks is, banks, they're not very special. Nothing to see here, move on. There's nothing special about banks. They're just financial intermediaries. That's the financial intermediation theory of banking. And they say banks lend out their deposits.
Right. Savings on the left, loans on the right, interest in the middle.
Yes, exactly. And with that theory, what regulatory tool to control banks is being used is actually capital requirements. So since the Basel Accords in the late 1980s, it's been capital that's been used mainly to get a handle on what banks are doing. And the idea is that this will control and restrict banks' activity so we won't have banking crises. Well, has that worked? Have we had banking crises since 1988? Tons of them. In fact, dozens and dozens. I'm a professor of banking, and I was astonished to find that the experts, the textbooks, the researchers weren't even sure how banks actually work. Academics and their theories are mostly wrong.